Welcome to the Market Review, where we discuss key developments in the financial and capital market as it affects the economy. Today, we'll be discussing understanding the value of the exchange-traded derivatives to Nigerian investors. And with me to discuss this is Mr. Jude Chiemeka. He's the Divisional Head, Trading Business at the Nigerian Exchange Group. Nice to have you on the show, Mr. Jude.
Thank you very much.
Thank you very much. Before we begin the conversation, let's take you through some key developments that occurred in the capital market from last week. Nigeria's leading commodity exchange, AFEX, announced its Code Crash Crop AG Hackathon, which is designed to empower innovators to create solutions that integrate technology, finance, and agriculture. The AG Hackathon is the initial activity in the third edition of the annual Code Cash Crop event hosted by AFEX in partnership with other key players in the agri, finance, and technology space. Also last week, the NGX Regulation Limited CEO, Chinwade Awe, urged all market stakeholders to come up to speed with recent trends in climate disclosure by paying closer attention to climate-related financial risk and opportunity in their businesses. She stated this during a virtual training on climate disclosure jointly hosted by the Nigerian Exchange Limited in partnership with the UN Sustainability Stock Exchange, the International Finance Corporation, and the Carbon Disclosure Project in Lagos. We go on a break, and when we return, we'll continue this conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content, watch Web TV. Same news, different perspective.
Welcome back. If you're joining us, it's the Market Review, and our conversation today is understanding the value of the exchange-traded derivatives for Nigerian investors. And my guest is Mr. Jude Chiemeka, is the Divisional Head Trading Business for the Nigerian Exchange Group. First, Mr. Jude, of course, the Nigerian Exchange Group launched traded derivatives market. Is being touted as the first in West Africa. But tell us the significance of this launch and particularly the value of a derivatives market to the Nigerian capital market ecosystem.
All right, thank you very much. The launch itself, just to more or less the work that started, it was necessary to have a derivatives market. So on the back of that work, a lot of heavy liftings have occurred, including the rules from the Securities and Exchange Commission in terms of how the market will be governed, as well as the rules from the NGX regulation in terms of regulating the participants, that's the trading license holders and the conduct and investors, as well as the heavy lifting that was done by the Minister of Finance in the new KAMA provision that allows the netting law, which is really the bedrock or the framework for derivatives contracts in our market. And then on the back of all of that, work also had to be done in providing the CCP, the central counterparty required for the settlement and clearing of this particular instrument. So the integration, obviously, on the trading side from the exchange, we use NASDAQ, which is a world-class trading system, and smart market surveillance. All that integration completed now, and we're able to list the NGX 30 index futures as well as the NGX pension index futures. And these are the two most sought after indices in our market. We have over 20 indices that are listed, but on the back of that, we have created these contracts so that investors in these indices can express a view without having to commit all the capital required to trade as a derivative instrument.
This is quite interesting, particularly the fact that you've engaged NASDAQ with their world-class experience And of course, we've seen the NGX 30 now on the global scale. And again, diversification of portfolio is very important. So it's an interesting development. But of course, I mean, the attraction to investors is very key. We'll talk about that. But let's look at the listings. You've talked about the NGX 30 index. What are the other developments around the derivatives market with this one launched in terms of winning more listings, which is very key for the market?
Derivatives is a peculiar instrument. As simple as they look, they're quite complex to trade and comprehend, even the way the contracts are structured. So we have the short and we have the long contracts that are listed at the same time, so that investors can express a view as to how they see the market playing out. I think there's a lot of capacity required to be done. We have certified trading license holders at the moment. We have a universe of 118 trading license holders. So there's a lot of adoption, even from the trading license holders. So we're getting involved in all kinds of capacity building initiatives. So we're working with CIS in the near term to just ensure that the trading license holders themselves are properly plugged into these products, because they have the access to these retail clients that are starting, so that the retail clients' participation can also improve. We have a universe of 3 million retail investors, but today we have less than 200,000 active retail investors in the cash equities market. So that also requires a lot of investor education webinars. We're strong on that, and just trying to improve retail participation in the market. So all that work, we believe, will allow the investors to understand how this new instrument trades and how they can use it to hedge, and also how they can participate by providing the collateral through the CCP to be able to take advantage of this listed instrument. And generally, these index features are perhaps the safest form of derivatives, just to help drive adoption, understanding of the product. And then we can go into a more exotic aspect of the product, which would certainly be around single stock features, considering the sort of listings that we have, sort of volatility that we see in the market. Certainly those single stock features are relevant to investors to be able to hedge their portfolios, improve performance of their portfolios, and ensure that those that also want to take a view can do so seamlessly without committing the huge capital that they commit today in the cash equity market. So we believe that adoption generally will be slow initially, but as investors themselves begin to understand the dynamics of this derivatives product, we'll certainly see a lot more participation when we start all the other elements. So we also plan to go into fixed income related derivatives in the near term.
Oh, that's very interesting. I like the fact that you broke it down honestly, that the adoption in the initial stage will be slow. But I like also the fact that you're talking about 118 trading holders, and particularly I'm impressed with the fact that you're making that bold move to partner with the CIS, Chartered Institute of Stockbrokers, for capacity building. That shows that you're willing to ensure that capacity is on ground. And then we can see how investor education from your end and engaging, of course, the financial media, deepen it and get back more retail investors on board, because 200,000 active retail investors at the moment is not so good. We have a universe of 3 million. We need to get them on board, and you can imagine what will happen in the markets. But you've talked about the CCP, several times. Let's talk about this partnership with the NG Clearing and how it's going to strengthen the whole value chain, because it's very important that we have a seamless process in the ecosystem.
Yes, thank you. So the central counterparty provides a very critical element in the whole derivatives ecosystem. And so today they will be responsible to ensure that the trading license holders through their clearing banks have enough collateral for the positions that they will be taking in the market. They'll also be responsible for the regular mark-to-market to ensure that traders are not over trading, and just be sure that when it does happen, that the margin call will go out immediately. You recall during the era of margin trading, we didn't have that system in place to check. And so there was a lot of abuse, and the CCP will ensure that those sort of things don't happen. But more importantly, there's that comfort that at the end of the maturity of the contracts, the views that have been taken will be resolved. So there's no point going into long conversation. We do have clearing banks that are joined in this whole process, Access and Senate. And so at the maturity of the contract, the cash element of it will certainly move, and the CCP will ensure all of that happening. So in terms of information flow, the ensuring the wide integrity of the market, and also guaranteeing to a large extent that there are no failures. Today in our cash equities business, we do have the trade guaranteed fund that ensures that all trades that occur within the market are settled. So we have zero failure in terms of trading that occurs. So the CCP provides, mirrors that to ensure that all the contracts will settle as agreed in the listings that we have when they do mature. So that is the role we expect the CCP to play, and given the sort of work we have done in integrating our trading system as well as their own trading system, we do not envisage a shortfall in these expectations.
And then true to what you said last year in your annual conference, maiden conference on the capital market, you're going to push products and innovation to drive the market. So this exchange-traded derivatives market is coming to transform the market landscape. But I just want to ask, in terms of attracting the retail investors and generally broaden our investor base, not just institutional investors who tend to engage this, but broadening it for retail investors. What are the opportunities for them? What do they stand to gain based on this new market?
So for the retail investors, I mean, the strategy as far as we're concerned is really to use technology, partnerships, products. So derivatives is one element of it. The other element is really the ease of participation in terms of how do people open accounts today, how did they fund, and how are they able to trade. Just on the back of the MTN offer, we did see we did see new set of investors who've never been in the market coming. So there's still appetite for good products. So we're working on the technology board. There's a lot of interest in tech companies. And so the technology board will lead to the listing of these companies and will also improve appetite from the retail investors' participation point of view. We do have the growth board, which to a large extent is really ripe, given the young population that we have. The conversation is always to invest in the growth board in itself, have exotic companies that these millennials can actually take a view on, a long-term view, and just based on the business model that these companies run, there's obviously a long-term value that can be derived. So the derivatives product then allows them to hedge and take these views. We have contracts maturing in 3 months, we have contracts maturing in 6 months. So as they get comfortable and the understanding is improved, so when we then begin to launch single stock futures, the fixed income derivatives, the commodities derivatives, it becomes easier for them to understand the dynamics of the market, can take a broader view. Derivatives on its own provides an opportunity to hedge, but more importantly, also allows investors to have a view without committing huge capital to express those views.
Thank you very much, Mr. Jude Chiemeka. I'm very happy to hear that the feedback, from the MTN offer, we have a new class of investors that came on board, because prior to now, what we understood was that the average age of investors was 54, which is not too good for a market like that of Nigeria with a young population. So with these derivatives, exchange-traded derivatives market, and with the innovations you've talked about, and particularly technology board, which I'm looking forward to too, because of what tech companies can do to the market. I believe that constant innovation, effective regulation, and like you rightly said, investor education will keep to drive this. But thank you very much for taking out the time to feature on our show, The Market Review. I was glad to have the NGX also discuss developments in their space because of how critical their role is in the equities and other parts of the entire capital market ecosystem. Thank you once again for the time.
Thank you so much for having us. Great to be here.
And that was Mr. Jude Chiemeka, Divisional Head, Trading Business Nigeria Exchange Group. He was discussing with us the value of the exchange-traded derivatives to Nigeria's investors. And of course, you can be rest assured that we'll continue to engage on how this market is evolving and creating value for the entire ecosystem. That will be all for this edition of the Market Review. And if you want to get further updates on understanding around the exchange-traded derivatives market and its value for Nigerian investors, please send your suggestions, comments, or questions to Ottoabasi@proshng.com. We'll be glad to respond to you. Also follow our website, www.proshareng.com. Yes, to log on to that website, you will get all the latest information on the capital market, particularly the equities market, and even see what's really happening around the Nigeria Exchange Group and all its subsidiaries as they continue to drive market activities. Also follow our social media platforms displayed on the screen for you to continue to get updates on our capital markets. Don't forget, you need to get the right information to make intelligent investment decisions. Thank you for being part of this show, and have a lovely day.